And so to a new trading week where the overarching themes are the Italian election and US sequestration aftermath, along with a busy schedule of economic data and central bank policy meetings. I'm Monica Gibson and I'm joined down the line by UBS Beat Siegentaler to discuss his projections for some of the most traded currency pairs. So Beat, I've mentioned but a few of this week's busy economic events. Are you surprised by the apparent lack of sequester concern from the markets? And which events or data releases would you suggest our viewers keep an eye out for this week?
Yeah, I think that a lot of investors are basically tired of political risks and political news. The whole U.S. debt ceiling discussion is just not anymore on investors' radar. At least kind of on the institutional investor side. And the Italian election, it was quite remarkable how quickly people took the view that this was really nothing new for Italy, and that they had unstable politics more often than not during previous decades. So I think really what that means is that at least for the time being we are mainly in the kind of the central bank watching mode, because that is what investors keep focusing on. So whatever, and of course this week we have a lot going on there in terms of whatever the ECB say, the Bank of England, the BOJ, the RBA overnight. So I think these are the kind of the events and the drivers of FX markets right now, not so much the political stuff.
An important week for the euro lies in store, with Italian politics and ECB negotiations at the heart of it. You mentioned investors are tired of political posturing, but uncertainty in Italy could in theory last until early April. So how do you see this weighing on the single currency against the dollar moving forward?
Yeah, in my view, euro-dollar has a bias to go up if nothing much happens. I think the ECB this week will not be very dovish, will not take any particular action, and will try to point out the positives in terms of the kind of the green shoots, as they said last week. Whereas on the other hand, I think the Fed is really the main driver of this, but the Fed seems to be almost entirely inactive. And as long as that's the case, for me, this means that there is ongoing support for euro-dollar, which will not allow us to drop much lower, and instead will push us higher, in my view.
The Swiss franc reflected some of the US dollar's improving fortunes, even in the face of heightened risk aversion. Euro tensions have resurfaced, suggesting that another test of the SNB's 120 floor cannot be ruled out. However, even with Swiss Q4 GDP growth surprising positively, its deflation problem still exists, which should mean the authorities' determination to defend this level will continue. Do you agree with this?
Yes, I think for many hedge funds, Euro Swiss has been the clearest long, fundamentally speaking, of any crosses, because the downside in Euro Swiss is so well defined. I mean, really, as sure as we can be about anything in life, really. I think the 120 floor under current circumstances will be defended at all costs by the S&P. So we know that 120 is really the lower level, and in fact, I think it will not go to those kind of levels anymore, because people know that at that point it's very much a free option. At least as long as inflation is low, as long as politically this floor is extremely well accepted in Switzerland and so on. So people want to be long. I think the problem has been that this trade has frustrated most because it hasn't really gone higher. So the question is about the trigger for the safe haven positions to unwind, which would drive us lower. But at least to me, there is little doubt that if one wants to have a position in Euro Swiss, and one that goes below kind of day trading, then or beyond kind of day trading, then one has to be long.
This week we'll see the Japanese Parliament conduct hearings into the nominations for Bank of Japan Governor and Deputy Governors announced last week. Markets will look towards April meeting as the first opportunity for their new stimulus measures to be implemented. Until then, some analysts are expecting dollar yen to probably consolidate further around the current 93 to 94 levels. But what is your outlook?
Yeah, many people still take a very cynical view about the end result of all of this rhetoric. And I would probably subscribe also to a very cautious view that in a multi-month view, it's quite uncertain that we'll be able to stay at current levels because most people do not really believe that the BOJ or in fact the whole Japanese system has changed as much, or that monetary policy is that powerful to really sustainably influence the currency that much. But until, as you say, until April, I think the whole hype about potential BOJ action, and in fact also the pressure that is on them to take action, and I think they will, means that there will be another leg higher first. So I wouldn't short dollar yen at this point and still be long, but I don't believe that we will go to the 100 levels or so, and instead I think over the medium term may well get disappointed again.
Beat, thank you very much for your insights today. It's been great speaking to you. Well, that's all for today's Targets in Focus. Earlier I conducted press review focused on the Japanese nomination, so please do click back for that. Bye for now.